This is Nightly Business Report with Tyler Matheson and Sue Herrera.
The bulls are back. Investors went shopping for stocks thanks to upbeat earnings on Wall Street and policy movement in Washington. In denial, Verizon didn't want to bring back unlimited data, but when customers fled, it did an about-face to stem the bleeding. And a hot-selling American brand in China.
I'm Phil LeBeau in Shanghai, China, where Cadillacs are rolling off the line and sales are soaring. Could China eventually become the largest market in the world for Cadillac? That story coming up on Nightly Business Report.
Those stories and more tonight, Thursday, April 20th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is off tonight. Wall Street and Washington came together, and the result was a stock market rally. Profit reports were mostly upbeat, European markets rose, and there seems to be movement on some of the Trump administration's pro-growth agenda. So here are the closing numbers. The Dow Jones Industrial Average rose 174 points to 20,578. The Nasdaq added 53, and the S&P 500 gained 17. Bob Pisani has more on what drove stocks higher.
Why the rally today? You know, it's a tricky call, but several factors are fueling the move higher. First, earnings have been mostly positive today, whether it was CSX helping the railroads, or Qualcomm helping the semiconductors, or Dover helping the big industrial names. The earnings story has generally been better than expected, at least it has today. Secondly, Europe had a very strong close. It's been very choppy this week. French elections have been a major concern for the markets. That's going to be happening on the weekend. But those worries seem to have eased today on some hopes that more moderate candidates might prevail in the first round of elections over there. Third, after a lot of hand-wringing in Washington, there's been talk about a House compromise on health care. That would be a major move forward. And there's been more positive tax cut talk. Stock picked up steam as Treasury Secretary Steve Mnuchin said, we're pretty close to bringing forward major tax reform. And lastly, we've had a bit of a bounce back. Sectors that sold off this month reversed today very nicely, particularly, for example, retail stocks and steel stocks. The president talked up steel all throughout the morning. So here's the bottom line. There's not been a lot of movement in the markets because there's not really been a lot of reasons to sell. And we're only 1.5% from the historic highs. It's hard to make a case for a big drop in the markets unless you believe one of several things. First, France might be pulling out of the European Union. Or secondly, the tax cut program President Trump has been pushing will be dead. Or third, the U.S. economic data is just going to keep getting worse into the second and third quarters, and the bond yields are going to keep moving down. For the moment, the markets seem to be saying that none of these prospects are very likely. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And as Bob just mentioned, House Republicans may indeed be getting closer to a new deal on health care. Kayla Tau has the details.
Nearly a month after the House pulled an 11th-hour vote on the American Health Care Act after not being able to shore up support, leaders of the two sparring Republican groups have agreed in principle to broad amendments to the bill. To appease moderates, there's protection for patients with pre-existing conditions. To appease the Conservative Freedom Caucus, there are waivers that let states abandon once mandatory benefits like maternity and mental health. A Freedom Caucus source said those changes would turn 18 to 20 votes to yeses. The moderate Tuesday group could not be reached, but its leader expressed support for the changes on Facebook. The changes, plus comments overseas by Speaker Ryan that they were putting the, quote, finishing touches on health care, sent expectations into overdrive. The White House reportedly wants a vote on Wednesday, but senior GOP aides caution that's unrealistic. The memo isn't legislative language, and members of Congress don't even return until Tuesday night. Republicans have a call on Saturday, but that was scheduled 2 weeks ago to discuss a forthcoming spending bill, and only now we'll need to discuss health care. For Nightly Business Report, I'm Kayla Tau, Washington.
So if a revised health care bill does come together, what challenges does it face? And with today's comments on tax reform from the Treasury Secretary, what can investors expect? John Harwood joins us tonight from Washington. Good to see you as always, John. So let's start with health care. What are the obstacles to the new blueprint?
Well, the obstacles are the same ones that faced it before. It has some elements of Obamacare, but it also would result in a lot of people losing their insurance. and the pre-existing condition protections might be preserved in name only, not in fact, because insurers would have the ability to charge a lot more for people with pre-existing conditions. So Kayla mentioned that expectations had gone into overdrive as a result of the talk about this compromise. I think they've been revved up way into overdrive, and everyone ought to temper those expectations.
We also have a coming budget deadline and a possible government shutdown looming.
That's right. Now, I think the shutdown is less likely, even though there's negotiations and disagreement going on. Three sides, Democrats, Republicans in the Congress, as well as the White House. I think the likelihood is that if we get to the end of next week and that deadline arrives, that Congress is likely to punt, at least for a short period of time, a week or so, while the talks continue to go on. I do think in the end we're going to avoid a shutdown and likely have a bipartisan compromise that will not have some of the controversial elements that the White House initially asked for. It's more important to Republicans not to shut the government down than to hang out for things that are difficult to achieve.
Right. There's been talk, quite a bit of talk actually, in the last 2 days and this afternoon about the timeline for tax reform, which does keep changing. But given the rhetoric that we heard today, has it changed again?
I don't think so. I think it's going to be a long process. If they get something done through one chamber of Congress by the end of the year, that would be a spectacular success. It's going to be difficult to do. You still have the questions to be answered about whether it's individual and corporate, whether it's going to be revenue neutral or not. Secretary Mnuchin said today that it would be revenue neutral, it would pay for itself, but only with a massive amount of dynamic scoring, up to $2 trillion, he said. That is going to be difficult to get through the Senate as well as the House, and there are still very large challenges, and we haven't even mentioned infrastructure. The administration still has not laid out their infrastructure plan yet.
All right, a lot to pour over, John. Thank you so much. John Harwood in Washington. The director of the International Monetary Fund said that she believes her organization can work with the Trump administration to improve trade. But Christine Lagarde also cautioned against protectionist measures.
The concern of all our members is to make sure that we protect free, fair and global trade, and that we all work at eliminating the distortion, at eliminating what could constitute a playing field that is not leveled and accessible to all. So we're on the same page.
Lagarde also said that by working together, all parties can improve the system that we currently have. Well, while Ms. Lagarde was speaking at the opening of the IMF and World Bank spring meeting, President Trump was getting ready to sign an executive order surrounded by steel CEOs to study whether steel imports into the U.S. should be restricted. His Commerce Secretary said the investigation will determine whether Chinese and other foreign-made steel are threats to national security.
We don't contemplate absolutely prohibiting the import of steel. I can't imagine that would be a conclusion. What we're trying to do is to change the arithmetic so that the dumping practices are not as effective as they have been. So this is not meant to say there'll never be another ton of steel imported into the United States.
The move helped lift a number of the steel stocks in today's trading session. As the Trump administration targets steel imports, China remains a lucrative market for U.S. automakers, and in particular for General Motors. GM has become the second largest automaker in that country, and it's now having success selling Cadillacs to Chinese buyers. Phil LeBeau is in Shanghai.
Zhu Jingge is about to buy his first luxury SUV. But instead of looking at the most popular high-end models in China, he wants to drive a Cadillac XT5.
My first car is actually a Buick, and now because of I'm getting better pay and I want an improvement, and I always liked the U.S. car brand, so I chose Cadillac.
Despite a slow start in China 12 years ago, Cadillac has risen to become the fourth best-selling luxury brand in the country. And as it expands production here, it may not be long until GM sells more Cadillacs in China than in the U.S.
We are among the fastest growing luxury brands here in China. And I'm very confident that we will be able to continue. So you will most likely see a double-digit growth this year in China.
A big reason why Cadillac is building more models here in China is not only because it's more cost-effective, but also because vehicles assembled in this country are not hit with a 25% tariff. That's the tax that China puts on all imported autos. And it's a hefty tax, but it hasn't stopped automakers like BMW from shipping thousands of SUVs from its plant in South Carolina to dealerships in China. With the U.S. exporting 10 times as many vehicles to China as it imports, few expect President Trump to start a trade war with China.
The reality is that for most global automakers, American ones included, they produce most of their vehicles here in China. So the tariff issue is only for a very, very limited segment of vehicles, high-performance luxury vehicles that are really almost immune to pricing.
That's good news for Chinese customers like Zhu Jingge, who are increasingly buying classic American brands like Cadillac. Phil LeBeau, Nightly Business Report, Shanghai, China.
Separately, General Motors has stopped doing business in Venezuela. This after authorities took control of the company's only plant in that country. The automaker has called the seizure illegal and has vowed to take legal action against that move. Still ahead, while price wars may be good for consumers, is the opposite true for shareholders? Earnings today from 3 Dow components. We'll start out with Visa. Late today, the world's largest payments network operator gave an upbeat outlook and reported better than expected quarterly earnings and revenue thanks to growth in its European operations. That was enough to send shares initially higher in after-hours trading. The company also announced a $5 billion buyback program. A different story for fellow Dow component Travelers, which reported a double-digit drop in quarterly profit. The property and casualty insurer was hurt by higher catastrophe losses thanks to wind and hail storms in several regions of the country. The company also authorized a $5 billion share buyback. Shares of Travelers fell more than 1% in trading today. Dow component Verizon is struggling to hold on to customers and get them to pay a premium for its service. The nation's largest wireless provider reported a decline of nearly 300,000 cell phone subscribers over just the past few months. Things could have been worse, though. The company reintroduced its unlimited data plans to stop the bleeding, and those new plans helped bring some customers back. The telecom price war hurt Verizon's bottom line and its stock price, which fell 1%. Well, Verizon is the nation's leading cell phone carrier, but it may not be as nimble and scrappy as it once was when it comes to competing against its smaller rivals. But whether you're the largest wireless provider or a mammoth retailer, what are the risks to investors if the company is losing market share? Eric Gordon, professor at the University of Michigan's Ross School of Business, joins us now to talk about that. Welcome back. Nice to have you here, Eric.
Hello, Sue.
You know, does it really come down to size? Are the bigger companies less able to compete and actually have to cut prices than the smaller companies?
Yeah, it seems as if a lot of them lose their agility, their ability to kind of appeal to customers with the newest, best, coolest thing. You know, they make a lot of investments in what made them big yesterday, and customers are fickle. So it can be very difficult for them to keep market share. Mm-hmm. And you know, once they start losing market share, it's really tough to get it back. You have to do something like you said Verizon's doing. You have to cut prices, and that's another big danger.
Or maybe you buy a competitor, right?
Or you do some consolidation. You know, we've seen a lot of that in the last 2 years where the only way you can keep market share or grow is to buy somebody else. And that's pretty risky. That ends up being kind of, history will show that those often don't work. So if you're a shareholder, you don't like to see market share go. You're not usually too happy to see your company do a big acquisition.
Now, we've talked about big versus small, but what about the biggest of the big, like an Amazon, like a Walmart? Are they immune to that because of their huge footprint?
The huge footprint helps them, but they're also very agile. Amazon is always introducing something new. It used to be just books. Now it's just about everything. Recently, Amazon got a patent on making sort of clothing on demand. That's pretty far from where it started, but it shows that it's one of those rare big companies that's kept its agility.
And is that why the stock continues to outperform versus, say, a Verizon, which lost strength recently because of this competitive environment?
Yeah, Amazon keeps showing that it can come up with innovative new things that people like. Verizon, not so much. I mean, a price cut, that's not new. They're going to buy Yahoo. I'm not sure that's going to help them very much.
So put on your investor hat for me. If you're seeing a company like a Verizon, or there are a number of others out there in the wireless space and other spaces that have had to compete, is that a warning sign to an investor that they should perhaps take a look at their holdings in that company?
Yeah, if I see a company losing market share, I give them a little bit of time to maybe come up with a new ad campaign. But if they lose market share over, 3 or 4 quarters, and the best they can come up with to turn that around is a price cut, as an investor, I'm going to start looking for alternatives.
All right. On that note, Eric, thank you. Always good to see you. Eric Gordon with the University of Michigan's Ross School of Business. The mortgage servicing company Ocwen is hit by a government lawsuit. That's where we begin tonight's Market Focus. The Consumer Financial Protection Bureau is suing that company for, quote, failing borrowers at every stage of the mortgage servicing process, end quote. The CFPB accused Ocwen of sending inaccurate monthly statements, ignoring customer complaints, and illegally foreclosing on struggling borrowers. In addition, more than 20 state regulators have blocked the company from engaging in new business. Shares of Ocwen were cut in half, down 53% to $2.49. The drug maker Tesaro said its new ovarian cancer treatment will cost patients nearly $10,000 a month for a 200 milligram daily dose. But the company said the starting dose would likely be at 300 milligrams, bringing the cost to nearly $15,000. Shares fell 6% to $139.01. The home builder D.R. Horton said an increase in orders helped that company post quarterly profit and revenue that impressed investors. The company also raised its full-year revenue forecast and said it expects to sell more homes than initially expected. But shares finished lower by 2.5% to $33.10. Sherwin-Williams said higher paint sales and an increase in selling prices helped that company post better than expected revenue and earnings. The paint maker also says it sees net sales rising in the mid to high single digits this quarter. Shares of Sherwin-Williams rose 4% to $324.02. Foot Locker issued a profit warning, saying a delay in income tax refunds caused customer spending to slow in February. The athletic footwear company also lowered its earnings guidance for 2017 to account for the slow start to the year. But despite the downbeat outlook, the company said it is encouraged by the sales momentum it's seeing this month. Shares rose 5% to $76.55. Activist investor Mercado Capital Management is calling for an executive shakeup at the restaurant chain Buffalo Wild Wings. The firm said the company's CEO should be replaced due to poor management. Mercado Capital Management founder Mick McGuire spoke about the issues that he says have been plaguing that company.
The fundamental operating metrics of this business have been in fairly significant deterioration for multiple years on end, whether it's traffic, comp store sales, restaurant level operating margins, returns on capital, guest experience, technology implementations. The list is extraordinarily long and broad, and there is absolutely no comprehensive plan by this management team or board to address any of these issues.
Shares of the company surged almost 6% to $163.75. Do you own Bose headphones? Well, a new lawsuit alleges that the audio equipment maker spies on its users and sells information about their listening habits without their permission. According to the complaint, Bose was collecting information not covered by its privacy policy. The lawsuit claims that a person's music or podcast listening history can reveal personal and identifying details. Bose has not commented. And there are reports that the CIA and the FBI are looking for an insider who gave top secret information to WikiLeaks. That top secret information, you may recall, described the tools the CIA used to penetrate smartphones, smart televisions, and computer systems. Experts say that cyber criminals are taking note and could use the same techniques to spy on you. Andrea Day has some tips on what you can do to protect yourself.
Every device is exploitable.
From your iPhone to smart TV.
There's always a risk of using smart technology that a threat actor could leverage it to spy on you.
Kevin Mitnick is a computer hacker who was once on the run from the FBI. After spending time behind bars, he now teaches people how to stay safe in a world filled with connected devices.
With IoT devices, it's kind of like the wild, wild west today.
And he says recent leaks show just how wild it can be, like WikiLeaks that exposed government hacking techniques, including eavesdropping through smart TVs. The CIA has not confirmed the documents are real, but experts warn these types of leaks could open the door for cyber criminals.
Even though the actual source code for the exploit wasn't included, it does give you data around how information was transferred that would allow a hacker or somebody malicious to develop their own exploits based off of that information.
And according to Mitnick, only extreme measures will fully protect you from spies.
To maintain anonymity actually requires you to obtain a device very covertly and use that away from all your other devices.
And he says businesses need to be ready for any government-funded attacks.
Unfortunately, if you're dealing with a threat actor of a nation state, they're going to have knowledge of vulnerabilities that the manufacturer can't fix. If you have about $1.5 million, you could buy a zero-day exploit for this type of device.
So what can you do now? To keep calls and texts private, he uses an app called Signal.
And what that does is it allows me to use end-to-end encryption when communicating with another person. That is the most secure type of communications that we have available today.
And when it comes to smart home devices, change the default password as soon as you plug it in. That's something many people never do.
You can never underestimate what someone might do to get even with you if they can get access to your home automation equipment remotely.
And he says, believe it or not, the most commonly used passwords are still 12345 and the word password. The best way to stay safe is to come up with a unique one and keep it updated. Also, never click on a message you don't recognize. And when you aren't using Bluetooth, keep it shut off. I'm Andrea Day for Nightly Business Report.
Coming up, traveling at hyperspeed. Imagine getting from Washington, D.C. to New York City in 1 hour. Why one company thinks that can be a reality. As you know, there has been a lot of talk about investing in our nation's infrastructure. Some see improved roads or bridges, but others envision hyperspeed travel. Morgan Brennan has our story.
A high-speed train so fast, blink, and you'll miss it.
How we do that is we levitate the train 10 centimeters above ground using a magnetic force.
The superconducting maglev can travel at 370 miles per hour, making it the world's fastest train. Development has taken 2 decades on a test track just outside of Tokyo, and the Japanese want to bring it here.
We know in the Northeast Corridor, our infrastructure is way behind where it should be. And so what we're looking at doing is a totally new concept, taking mature technology that's from Japan, the world's fastest train, and bringing it here.
Wayne Rogers is the CEO of Northeast Maglev, the company looking to bring the system to the busy Northeast corridor. The new 220-mile line would carry passengers between New York and Washington, D.C., mostly underground and away from road crossings and other tracks. Amtrak's Acela trains currently do it in 3 hours. Maglev would slash that down to 1. If this moves forward, work could start as soon as 2019. The cost, $100 billion.
First, it's a privately led venture instead of all being a government project. The second thing is we've mustered not only private investment, having spent nearly $100 million on the project so far, but also Japan has said that they would help financing significantly the first leg.
That may sound enticing, but the project also has its skeptics, including Amtrak's Wick Moorman, CEO of the government-backed railroad this would compete directly against.
Rail has the flexibility and all of the advantages of being able to use current infrastructure in highly congested areas. So I think it makes a lot of sense. And anybody, Maglev, Hyperloop, high-speed rail, they're all going to require enormous amounts of investment, and the business model doesn't support it.
U.S. high-speed rail has been nothing but a pipe dream for decades. It's expensive to build and maintain. Regulatory hurdles are high and take years to clear. And most debilitatingly, local opposition almost always emerges. So while the Maglev vision is purely Japanese, making it reality will be a purely American feat. For Nightly Business Report, I'm Morgan Brennan.
And on that note, that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, and we will see you right here tomorrow.